Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 1st of December. Right now, another bit of a crazy day, as you'd expect with this, the Omicron coming out. Equity markets sort of belted back into place. US Treasuries all over the shop, and the major currency pairs, no clear uniformity, although they have been sort of doing similar things, but it's pretty chaotic. Now, let me just give you a look at that. The now, with the announcement from the Moderna, whatever it is, CEO, like recklessly coming out saying basically he doesn't think any of the other vaccines will do anything against the Omicron. That's obviously a very good business decision. Markets get a little bit chaotic, right? We had Jerome Powell out as well, talking about, the need to basically get things progressing quicker than later because the US economy is heating up. So we've got a clash here between the potential slowdown globally if this Omicron proves to be, nasty. And then you've got also what that does to the Fed plan. They're talking about being hawkish, getting more aggressive when they may have to unwind everything, right? So with that, you get some crazy moves here on the Swiss and the yen, right? The safe haven trades. It's not exactly clear what the hell you should be doing, right? We do have still some clear trends here on the Aussie. It did pop above a recent short-term resistance line, but still sitting below 72 the figure. Like the euro now is completely like blown out, right? It's just hard to work out what's going on there. Sterling, well, it's getting the knee-jerk reactions from the various releases, but no clear trend. Like the trends are now sort of being pulled apart somewhat and bashed up, right? The dollar CAD, well, oil's back at $66. We've been waiting for that for months. It's a shame it comes at this time because there's so much convoluted news. It's hard to work out what's going up, what's going down. What is going down is oil. That supports a higher dollar CAD or a stronger dollar CAD. We'll have to see how that plays out. And that's where we are, right? The dollar index still moving to the top side, but short term, if you're trying to trade through this stuff, right? Look at these moves here on the Swiss, up 100, down 100, back to where it was, right? That's not easy trading. If you think you're going to capture that move, well, you're kidding yourself, right? The main thing I think at this stage is still focus on the overall bigger trends, right? And if I come into the daily charts, you can see where those trends are, right? The dollar block, Aussie, you've got Aussie, Euro, Sterling, Aussie, Kiwi, still sort of trending lower, right? Dollar CAD is coming back out of its sort of sideways downtrend sort of thing. And dollar yen sort of heading up, dollar Swiss really sideways and dollar index up. Focus on that bigger trend. You might sort of try and make odds and ends of what's going on. Now, getting in on short-term trades around these geopolitical events is absolutely troublesome, right? So don't think it's going to be easy trying to guess when you may get the next head of a vaccine company, Pfizer or AstraZeneca or whoever it is coming out. They're all going to say the same thing. Oh, no, you need to take more stuff, right? You're not going to punish your business and go, no, you don't need us. That's just idiotic, right? So the main thing for us to be focusing on is watch out for the risk around these random releases. In amongst that, keep an eye on the Fed in particular. They are the main hub of all activity at the moment. And any sort of variations of their spiels, like at the moment, it's business as usual for Jerome Powell, unless something changes. But if they do swing things around, well, there's going to be a big dollar sell-off as everyone gets off the dollar trade, right? There's been a bit of unwinding, but not the whole lot just yet. So to me, if this blows up, dollar falls and all the other pairs rally. And also the yen and Swiss will continue to rally as well. All right, tricky times, and it's as I said earlier in the week, it's disappointing that this has come out because we're talking about is central banks and fundamentals. Now they're all being pushed aside a bit as the markets reposition for a potential close down. Yields lower, right? Usually would mean equities up, but the equities are getting belted as well. So when you start to see these things, there's like risk all over the place. Okay. Risk off day, you'd think Euro, Sterling, Aussie, Kiwi would be falling, but they're not. So there's no clear connection here between the currencies, treasury bonds, and equities at this point. And that's confusing, right? All right, just hang in there. If anything, try and look for short-term opportunities at the moment. Non-farm payrolls Friday. Okay, it's more of a checkpoint, this one, as opposed to, shaping policy. So I've already mentioned that over the last week or so. So don't get yourself sort of too bent out of shape thinking non-farms is going to be awesome. It may well be, but you know what? We've got other things to consider, which is all geopolitical, which means random releases, unpredictable direction, and high volatility. So hang on to your hats. If anything, if you're trading, I'd reduce your trade size and just try and chip away until we get a bit more confidence with what's going on. All right, guys, have a good one. Cheerio.